Market news now. Asian markets fell on Wednesday, following a rout on Wall Street as investors were bombarded by a perfect storm of problems from trade to Brexit that erased the positivity seen at the start of the week. The glum mood overshadowed hints from US President Donald Trump that more time to resolve the China-US trade row was needed, as well as soothing comments from China about their desire to push on with a weekend agreement between the world's top economies. Now, the global market rout continued as Tokyo fell 0.5% to 21,919 points. The Hang Seng was down 1.6% to 26,819, while the Shanghai Composite slipped 0.6% to 2,649 points. Wall Street tumbled more than 3% on Tuesday, led lower by bank and industrial shares. The US bond market sent unsettling signs about economic growth, and investors worried anew about global trade. The Dow Jones Industrial Average fell almost 800 points to end trading at 25,041 points. The S&P 500 lost 3.2% to finish the day at 2,700 points, while the Nasdaq Composite dropped a whopping 3.8% to 7,158 points. For more on the markets, we cross to Arabile Gomede at the JSE. Not so much good news here either, Arabile.
Yeah, certainly not. And as you said there, a big 3% fall there across the board when it comes to the United States, and Wall Street as well suffering quite dramatically there. It has been red across the globe though as well. Out in Asia as well hasn't been that good a day, as you pointed out a little bit earlier on. Even Europe this afternoon just seems to be going down as well. So it is pretty much a bad day across the board. We're down around 1% as well today. So things are relatively negative across the board. We'll discuss exactly what brings about that sense of negativity in just a bit, but let's unpack the rest of the European and local markets. As you saw there, even the rand taking a bit of a hammering as you take a look at that mark, going right above there. That 1350 mark that we had yesterday, now around 1380 or so against the US dollar. So let's chat to Bright Khumalo, our portfolio manager at Vestac Asset Management, as we get into the gist of what's happening. Bright, 0.8% lower today. We had what we thought was a good day out on Monday, and we expected things to perhaps go into a December rally.
Of course,
stunted.
You know, they talk about, you know, the Santa rally. We were right, you know, ahead of that on Monday, after obviously the meeting on Saturday in Argentina, where Trump basically tweeted and saying, okay, you know what, there's a trade war truce, you know. So we celebrated that truce on Monday, but unfortunately it only lasted all of a day, and today it's red all over the screen and it's hot outside, and you know there's conversations on Power FM. There's just a lot happening.
Yeah.
But in terms of, you know, falling down as relative to the rest of the world, we're actually doing much better, and maybe some of that is actually the heat is being taken by the rand, and that's why you're seeing the banking stocks today like Investec, Nedbank,
yeah,
and the likes, you know, all those SA Inc. stocks taking more heat than the dual listed companies and those rand hedges basically.
But why are we down? Even if it is the global picture, why is it that we are actually down right now?
So it's a very simple thing. You remember on Saturday, Trump comes out and says, you know, there's this truce that's, you know, they're working on, and then yesterday morning, you know, US time, he comes out saying, he calls himself the tariff man. Yeah. First praises Xi Jinping about being the greatest, you know, leader he's ever met, blah, blah, blah. But, you know, they got 90 days to make this thing happen, or if they don't, you know, arrive to an equitable resolution, that he's gonna go guns blazing with more tariffs. Yeah. So the market again doesn't like uncertainty, and he shot himself on the foot there again. I don't know, it's the third or fourth time I'm saying this in this show again. It doesn't know when to, you know, as a winner, to take his wins and go home. Yeah. He always just has to mess it up and smash someone's car or do something, you know, and it doesn't
just go a little bit overboard.
Exactly.
So when you talk fundamentals though on the South African Inc. stocks, or rather should I say just on the JSE rather, are there stocks that we perhaps look at now and we go, yes, this is very cheap and they're primed now to perhaps get a little bit of an
uptick.
Perhaps maybe not in the December rally, but really headed off into next year.
Look, if our economy continues like how we're doing right now, SA Inc. definitely is going to benefit, and just the JSE overall. We talked, I think it was a week ago, that only 33 stocks were in the positive this year. That number is actually less now. It's like 28 stocks. It's terrible. It's not looking good. The only surprise here is on the upside, and we've seen a bit of that in the past couple of days with those GDP numbers coming through. But again, we're going backwards, like we've spoken. But we're going in the right direction in the economy. I'm confident, but again, 2.2% or whatever that is, quarter on quarter is not enough. We need 5.
Yeah.
Yeah, and we need
to
quickly.
Get there. How do we get there? How do we speed roll that right now? I mean, yes, it came from a low base, so we're able to perhaps pick it up a little bit. We're about 0.5, 0.7 for the year. It means nothing, really. It
needs to start slow, and it needs to start in business. If you make the smaller businesses feel like they could spend and hire more personnel, and obviously, whether they're in services or manufacturing or wherever they are, if they feel like they can spend a bit more to grow their little shop, that's a positive way to start. So that starts with business confidence, and then it comes to the consumer. All of that is going to drive down, trickle down all the way to us, the consumers. We can take our salaries and feel like we can spend again. Because right now, people don't feel as comfortable, to go out there and borrow more money, even though the rates historically are still relatively low. They don't feel like they could service that debt going forward.
Yeah.
So those are the little things that have to change for us to have, that buoyant, that confidence to say, okay, things are looking better now. I can borrow more money. I can put it back into my business. I can reinvest in the country, in my people, in the staff, everything. And then you'll see that also push the markets up as a whole.
We also had CPI come out, and some of the questions we ask around that figure has been because of the last MPC decision. Even if inflation was to reach 5.5%, it's still within the band. But it doesn't seem to make the Reserve Bank happy.
No. The Reserve Bank was playing defensive, right? So they were sort of preempting what the Fed is going to do, and obviously that didn't work out so well, in the most recent call, because the Fed then came out after having little jitters with Trump. They came out and said, okay, look, we are sort of net neutral here. We're at a happy medium. So things are going to be different going forward. And seeing the CPI number being where it's at in that happy medium for us South Africans means also the Reserve Bank here is going to sit on his hands and just watch closely.
Yeah, that'll be of keen interest, I think, across the market. That Brent crude price is going to be of keen interest. OPEC set to meet. South Africa, of course, having seen a drop in petrol prices of around R1.84.
Yeah.
It almost wipes out the rise in petrol prices for the year.
Yes, but the unfortunate part there is that it's good for us middle class people who use fuel and cars to drive to work. I don't, but you do. It works, but for the man on the street, really, the majority of the South Africans out there that use public transport, 66% of them, or 2.7 million people per day. Taxi fares actually has gone up, and they never go down. Since I was born, I've never seen a taxi fare go down because petrol price went down. So it's still unfortunate, because it means that the transport cost has gone up.
Yeah.
That hasn't changed, unfortunately.
Let's hope that this sort of swings around at some stage today. We'll certainly hope for that. Almost 1% down for the JSE today. Bright Khumalo, Portfolio Manager at Vest Act Asset Management. That is where the buck stops this afternoon. We also do say goodbye to our SABC 3 viewers. Of course, the Tshwane Spartans are set to take on the Paul Rocks in the Mzansi Super League T20 competition right now as well. But we do continue our transmission on 404 as we unpack the latest in markets and business news. Do stay with us.